Institutional investors and retail investors are two very different players in the world of finance. Institutional investors, such as pension funds, insurance companies, and hedge funds, have large amounts of capital at their disposal and are able to make significant investments in the market. They often have teams of analysts and researchers who help them make informed decisions about where to put their money. On the other hand, retail investors are individuals who invest their own money in the market. They may not have the same level of resources or expertise as institutional investors, but they can still make a significant impact on the market. Retail investors often rely on their own research and instincts to make investment decisions. One of the key differences between institutional investors and retail investors is their investment horizon. Institutional investors typically have a longer-term perspective and are more focused on achieving steady, long-term returns. They are less likely to be swayed by short-term market fluctuations and are more willing to ride out periods of volatility. Retail investors, on the other hand, may have a shorter-term perspective and may be more influenced by market trends and sentiment. They may be more likely to buy and sell stocks based on news headlines or social media buzz, rather than on a careful analysis of the underlying fundamentals of a company. Another key difference between institutional investors and retail investors is their level of risk tolerance. Institutional investors are often able to take on more risk because they have a diversified portfolio and can afford to absorb losses in one area of their investments. Retail investors, on the other hand, may have a lower risk tolerance and may be more cautious in their investment decisions. Despite these differences, both institutional investors and retail investors play important roles in the market. Institutional investors provide liquidity and stability to the market, while retail investors help to drive innovation and competition. Both groups bring unique perspectives and insights to the table, which can help to create a more dynamic and efficient market. In recent years, there has been a growing trend towards democratizing finance and giving retail investors greater access to the market. Online trading platforms and robo-advisors have made it easier than ever for individuals to invest in stocks, bonds, and other assets. This has led to a rise in retail investor participation in the market and has helped to level the playing field between institutional investors and retail investors. While institutional investors and retail investors may have different approaches and perspectives, both play important roles in the market. By understanding the strengths and weaknesses of each group, investors can make more informed decisions and help to create a more vibrant and resilient financial system.